All right, I have some breaking news from you. This week or last week, we had some shocking inflation numbers. And really, I mean, there's a lot of opinions about what they mean, and today we're going to talk about this. In my opinion, they're a lot worse than expected. The MAGA is trying to spin it like it's great. It means the economy is doing great, everything is good, it's the best economy ever. But at the same time, they're asking the Fed to um, to stimulate the economy by lowering the interest rate. And if they don't do that, then they're threatening to fire Powell. It's kind of I don't know what's going on there. But so in this channel, I break down what's happening, why it matters, and what you should be doing about it. So here's what you need to know right now. First, let's look at the Fed number here. Let's see. So this is the Bureau of Labor Statistics. We're not looking at the Fed. The Bureau. This is the CPI report that came out about June, and basically over the last 12 months, then the CPI has increased by 2.7%. This is also seasonally adjusted, but this is a massive change. This is actually an increase from what we were expecting. And so this is a little bit of a surprise for a lot of people. The energy decreased by 0.8% over the last 12 months, but the food index increased by 3% over the last 12 months, same period. Right, so when we look at the numbers here, so when we're talking about CPI, we're talking about a basket of goods. And so this is basically what this basket of goods look like. You can see that electricity over the last 12 months has gone up by 5.8%. Utility gas service, so if you get like natural gas through your home via pipe, then this went up by 14% compared to last year. We also have shelter up 3.8%, transportation services up by 3.4%, and medical care services also went up by 3.4%. So there's a lot of things that went up. There's some things that went down. So energy commodities, we had some fuel oil went down, but you can see that most of the things have gone up. We also had an article here from the New York Times. Inflation accelerated in June as President Trump's tariffs started to leave a bigger imprint on the economy. So keeping the Federal Reserve on track to hold interest rates steady when policymakers meet next month. So, the Fed's mandate is to basically maximize employment and make sure that prices are stable. So they're looking for 4% in terms of unemployment rate. They're looking for 2% in terms of PCE, which is kind of like their version of the CPI, and that's what they're looking at. But the core inflation, so the CPI went up by 2.7%, as we discussed. But the core inflation, where we take away food and energy, these are the ones that were very volatile, that were changing a lot in the basket of goods. When you remove those, energy was going down, but then the core inflation, the food was going up. So when you remove those, these prices were going up by 2.9% for the same 12 months period. So this is pretty significant. So if you felt that the prices were increasing, well, you were right. So today what we're going to talk about, did the tariffs actually impact inflation? Why didn't businesses raise their prices in anticipation of the tariffs impact already? And how will business react? And what you should watch for and what you should do about it. So did the tariff actually impact inflation? So the short answer is yes. And I have a graph that kind of shows that, which is the CPI over so this is March 2024. So this is the whole year of 2024, and then January 2025 here. And you can see that since January, the CPI, the inflation, has gone down all the way to April. And then since April has started to go up. Does anybody remember what happened in April? Did you guys celebrate the Liberation Day? So this is what happens. In April 2nd, we had Liberation Day was announced. Announced at 10% on everything, 10% tariff on everything. Then April 9, Trump announced country-specific reciprocal tariffs that had to go into effect. So that was a wide range of tariffs. And 12 hours later, they basically paused the whole thing. They kept the 10% tariff on everything, but the reciprocal tariffs was kind of like abandoned and paused basically until July 8th. On July 7th, very last couple of weeks, a couple of days ago, they paused and extended this deadline to August 1st. And now they're saying that this is very firm, but not 100% firm. Very firm, but not 100% firm that August 1st is going to be the date for that. So, with all the confusion, we need a little bit more propaganda and disinformation, and this is why the Trump asked basically the CEA, the Council of Economic Advisor, where is that? I think this is this one, this article, to basically publish something, some report that finds tariffs are not causing inflation. So stop saying that. A new report from the Council of Economic Advisors found that the prices of imported goods have fallen this year and have dipped faster than overall goods prices since February. So this is actually true. The imported goods prices has gone down, but I'm going to tell you why I think it has gone down. So the CEA is an agency within the Executive Office of the President. So it's basically another arm of Trump, another brain cell of Trump, and they basically are just spewing whatever disinformation they want to spew. The person that's responsible for that is Stephen Miron. I don't know how to pronounce his last name. I apologize for that. But this guy is a piece of work, really. So CEA is a megaphone for Trump disinformation machine. Stephen Miron also authored a white paper in November 2024, and which is the basis for Trump's Liberation Day tariffs. So he wrote the playbook or the blueprint for this Liberation Day. But they did say one thing that was true, which is that the import prices have gone down. So I thought this was kind of interesting, and I think we should look at that. And so this is the import prices index and how they've changed from year over year. And you can see that compared to last year, in January, December, January, February, and all the way down to today, the import prices have gone down, which is kind of interesting, right? So that would say that, oh, the tariff didn't impact anything about the import prices. So the import prices have gone down. But why? That doesn't make sense. But the reason why is because the importers, the U.S. importers or U.S. businesses, started stockpiling before the tariffs were imposed. A lot of them knew already in November after the election that said, okay, we're going to have tariffs. Let's get prepared for that. So then that reduces the demand for these products, for these imports. And then when you have lower demand, you also have lower prices. Also, foreign exporters, they wanted to lower their inventory. They wanted to push as much stuff as possible before the tariffs were imposed as well. So they probably have gone some kind of like discount or put all of that, buy all of that, and we'll give you a good price to get this thing off before the tariffs. Also, the strong dollar. So foreign sellers, they get paid in U.S. dollar. When we buy something, we have to, they get paid in U.S. dollar. So if I have a very strong dollar, I can give less U.S. dollars to buy the stuff that I need. So that means that it lowers the amount of U.S. dollar, which lowers the import prices, basically, that is reported in U.S. dollar. So let's go to CNBC here.
Allianz Chief Economic Advisor Mohamed El-Erian joins us now. I mean, there's more evidence, Mohamed, that the tariffs are not leading to inflation. We had a pretty robust debate about whether that would happen. What do you think is going on beneath the surface here?
So I think the best way to characterize it is the discussion you and Carl had at the top of the hour. We're somewhere in the third or beginning of the fourth quarter of this game. So far, inflation hasn't picked up because of tariffs in any material way, that's the good news. But we can't declare the game over yet. And
Sure.
that's why there's hesitation to say the all clear on inflation is we don't know yet where tariffs are going to settle, and we don't know yet what happens when inventories are totally run down and companies have to make really difficult decisions about price pass-through or margin compression.
Right. So we don't know yet. But what we do know is that for the last few months, it hasn't really materialized in a way that the Fed was worried that it would. So what are they waiting for?
So what they are waiting for are two things. One is they want clearer evidence of weakening in the labor market. And the second thing is I think they are hesitant to move given the amount of political pressure. I think they should be cutting this month, but I don't expect them to cut this month.
So let's go back to this. So again, what this guy's a very, he's very well respected individual in business and the economy and all of that, investments. And basically, it's too soon to say that the tariffs are not causing inflation. So, so business have loaded up ahead their inventory. They're doing all kinds of things. So we won't know until they have to kind of like refill, resupply, what the actual impact of these tariffs will be. When that happens, then business will have really like two choices. They can pass through. It's not really binary. There's a mix. There's kind of a blend that they can do. Pass through the additional cost to the consumers, or reduce their profit margin. So the other question that he answered is that why is the Fed not lowering interest, right? So when you're looking at the economy, the Fed is responsible for full employment, like maximize employment and price stability. In terms of employment, we're at maximum employment pretty much. 4% is considered the full employment. So we're at maximum employment. So they're trying to see if they lower interest rate, that's going to stimulate the economy, but we don't have the workforce to do that. With the immigration, the deportation that's going on as well, we don't know, if how many less unemployed people we will have. So there's kind of an unknown here, but we certainly are not seeing kind of like an increase in unemployment anytime soon. And the next thing is going to be inflation. Right now we're seeing the inflation increase. Again, if you stimulate the economy, that's going to cause more consumption. That's going to cause an increase in inflation. And the tariffs, how they're going to play out, we're not sure yet. So I think it's correct for the Fed to kind of pause a little bit and make sure that you have the right evidence before you pull the trigger and lower the interest rate, lower the Fed rate. And then I'm going to do another video about this, because lowering the Fed rate doesn't mean it's going to necessarily lower the mortgage rate. So this is kind of like where we are on that. So why didn't the business raise their prices in anticipation of the tariffs impact, right? So businesses knew about that for a long time. Why didn't they start raising the prices? And maybe some of them did raise the prices before there was any tariff impact at all, or not tariff impact yet. Maybe some businesses, they know they're not going to be influenced by the tariffs. So, but take advantage of that to increase prices anyway, so that you can make more money, right? More money for the investors. They've done that in the past. I mean, don't let that fool you. They have done with COVID, other inflation news in the past, and now with tariffs, taking advantage of the fear in the market or the news cycle to increase their prices and do something of that nature to basically make more money. So why they didn't increase their prices is because consumer spending went down. It went down significantly. So businesses are afraid to pass on these additional costs, the cost of tariff, because they're afraid that their consumers are just going to stop buying, or they're going to go somewhere else. So unless they have something that where they have pricing power, they can increase the prices without causing any kind of disruption. And I think I have a chart for that shows this is the personal consumption expenditure, and you can see that since December 2024, this is how quickly the consumer has stopped spending. So this is a significant decrease in consumer consumption, and so they're afraid of that, and they really cannot increase the prices because the consumer is just not going to buy their product, or they're going to switch something else. So how will business react? So we have two groups of business. We have business that have pricing power. They can change the prices with impunity, basically, and they will pass on the cost or the majority of the cost of the tariffs to the consumer. This would be like Walmart, Mattel, Nike. So they have they have great a price leverage. You have great distribution, all of that, and some of them like Walmart already announced price increases. And I know a company was monitoring the price changes at Walmart, and I couldn't find the chart about that, but I'll find it before the next video. So for these companies, they will likely preserve their margins. They're going to be very profitable. How do you take advantage of that? Well, you could invest in Walmart, Mattel, Nike. Then we have another group of business who can't increase their prices because of the market forces that are out there. Too much competition, or basically that it's the kind of products or service that the consumer can basically say, I can do without it. I don't need to have that. So these companies, they most likely are going to reduce their profit margins, but their top revenue is going to go down. So they can just leave it as is, keep all the expenses the same, and take it on the margins, or they can start cutting costs so that they can maintain their margin, or kind of lower the impact of these additional costs. So the typical thing that they do is that they do layoffs, because that's one of the easiest things that you can do, is just lay people off. A lot of other things, there's contracts, and it's hard to stop. So layoff is one of the easiest things that you can do. And so I think here I anticipate some kind of layoff in that situation when the tariffs are going to be taking a bite on these companies. So if they are in the stock market, that means that poor Q3, poor Q4. So that means also stock market down. So imagine earnings report from different companies. They're gonna advise their expected profit down for Q3, for Q4, and maybe for Q1 2025. That's gonna have a lower impact. This is gonna push their prices down on the stock market. So some of the impacted industry is going to be the grocery space, is going to be small caps companies that don't have really the leverage or the way to escape those tariffs. So what should you watch for when you're listening to the news? Earnings guidance from the different earnings report for the companies that are going to start reporting in Q3, especially from firms in retail, consumer packaged good, and imports heavy manufacturing, so obviously auto and high tech. Margin compressions, kind of compare the different margins over different periods and see where the differences are. You could also expect some sector rotation. So this is investor driven, where they're going to go from one industry and go to another industry, kind of move away from small caps into some other industries that is to a Walmart or something like that, where it's a little bit more stable. And we can see, we already saw since November 2024 that the small caps index has gone down by 26% since then. So people are already moving out of this sector because it is heavily impacted by tariff policy. Also, be on the lookout for tariff policy changes. As you know, they're changing all the time. It's very hard to keep track of all of them. In fact, I don't even know that anybody knows exactly what the tariffs are at any particular time for any particular item from any particular country. It's getting extremely complicated and changing all the time. So, but try to think of big policy shifts that are happening. Then look for the Fed lowering rates. So if the Fed start lowering rates, this could be a big impact. I'm going to do another video about the impact of that. Again, I've talked about the price, the mandate for the Fed, but that could indicate that they're expecting a recession, and that means that they want to stimulate the economy ahead of that. So if they see something like that, if they see like a massive layoffs, or they see something in that vein, then maybe they're going to want to stimulate the economy. But right now it looks a little bit more like stagflation, because you can see that the consumer spending is way down, and it looks like it's trending even faster. Well, so this is the latest that I have, but as you know, like, this story is still going on. So if you are overwhelmed by the news, what's going on, and all the conflicting ideas, and you don't know what you should do about it, make sure you like and subscribe to my channel, and we'll see you next time.